Hello and welcome to the April Nutmeg Investor Update. I'm Brad Holland, Head of Investment Strategy. Normally our investor updates focus on just the previous calendar month, but so much has happened since then that we think it's important that we take a slightly different approach this time. The investment team here at Nutmeg are busy processing the events of the last few weeks, which have so unsettled financial markets. We know our customers will also have many questions at this time, and we would like to hear them. You can reach out to us in the comments below this video or at support@nutmeg.com. And we'll be sending out more regular updates over this period to keep you informed. So what's worrying investors? And we'll summarize what happened in markets in March, specifically later on. But investors have been unsettled for some weeks now. And this has been due in large part to the Republican administration making continued threats to implement sweeping new tariffs. And this culminated in what the US president has termed the Liberation Day, which arrived on April the 2nd. The announced tariffs vary significantly in terms of how punitive they are. And different countries are working out their best response, whether that's to retaliate or whether to ride out the uncertainty. We think waiting could be the best strategy right now. And President Trump has a track record of changing policy settings after they have been announced. And we can't ignore the announcement, of course, but it may not be prudent to take it fully on face value. President Trump's negotiating tactics typically involve the use of uncertainty. The US president believes that the tariffs will ultimately boost US economic growth, and only time will tell if his pursuit of US economic protectionism will deliver. In the short term, though, the global economy is certainly expected to pay a price for these larger than expected tariffs. And the US president himself noted a period of transition might include some economic disruption in pursuit of its long-term goals. It isn't possible for us to put an accurate time frame on how long we expect volatility to persist. Given the number of countries considering responses and how long negotiations can take between nations, maybe weeks or even some months before markets start to reflect greater confidence. So what does the recent volatility mean for Nutmeg portfolios? Well, our investment team has been keeping abreast of developments as they arise and assessing the implications for portfolios. And we expect tariff negotiations to include some retaliation, as we have already seen, as well as some winding back of tariffs that were announced. We've been running now a small equity overweight all year, holding modestly higher equity exposure than our long-term benchmarks. This on the basis of improving global growth and global trade. But as mentioned, the tariff announcements added extra uncertainty around this. And so we removed this overweight position in early April, selling a small amount of our equity investments in large US companies and retaining those proceeds in cash. Now, multi-asset portfolios at Nutmeg are built with global asset diversification at their core. In all but our highest risk managed portfolios, we've also been maintaining extra bond exposure that benefits when bond yields fall, as they did in early April. Now, these changes we've made to help manage the risks around unknown policy direction in the near term. And ultimately, though, equity market performance revolves around the medium to long-term prospects for the economy and its profitability. So have economic prospects materially changed? Well, at the current time, we don't expect a recession in the US economy in 2025 as our base case. And we expect earnings growth to remain relatively healthy for US companies, albeit weaker than expectations we had at the turn of the year, given what I've been talking about. But indeed, despite trimming our US stocks, our portfolios remain more exposed to the US equity market than other markets because we continue to expect the US economy to outperform others in the long term. Now, we continue to monitor the volatile policy landscape and stand ready to alter the shape of our fully managed SRI and thematic portfolios as events unfold. Fixed allocation portfolios are adjusted once a year. JP Morgan Asset Management advises Nutmeg on the management of their Smart Alpha portfolios, and they've also trimmed equity exposure. So what about March? What did happen in financial markets? Well, it was a varied performance according to region and indeed asset class. But US equities, having reached a new high as recently as mid-February, were notably weaker in the month. Major stock markets in the UK and in Europe were comparatively resilient, but still declined. Japan struggled to make headway, but didn't have as tough a time as the US equities did. And in government bonds, they were mostly down across March after a pretty good start to the year, as bond markets began to worry how much governments will need to spend in order to maintain growth in their economies. Well, it's a testament to the impact of the Liberation Day announcements that it almost entirely overshadowed some pretty significant economic events that unfolded elsewhere over the course of March. In the UK, Chancellor of the Exchequer Rachel Reeves used her spring statement to announce that economic growth in the UK would get worse before it gets better. In Europe, there was some good news in the shape of Germany approving a larger than expected infrastructure spending plan to stimulate its economy, as well as some changes to its debt rules that should allow an uplift in defence spending. And there were early signs of a possible resolution in the war in Ukraine. Optimism elsewhere had been building that the Japanese economy might break free of a decades-long fight with deflation. But in truth, you could barely hear all this over the tariff noise. So one last message in today's update. I want to leave you with a key investment principle. Market volatility is unnerving, no matter what type of investor you are. But focusing on what you can control is key to good investment outcomes. Over the coming weeks, you may see value of your portfolio moving around. Volatility is normal for financial markets, and many things can influence the value of shares and bonds. The important thing to remember is that although the value of your investments may fall in the short term, evidence from history shows that in the long term, positive returns relate to the amount of risk taken. You can't control the news or the reactions of other investors around you, but you can control the impulse to make decisions when you don't have all the information. We know we are preaching to the converted with many of our investors because in the past, the vast bulk of you have ridden out these market storms without changing your portfolio. If you're feeling nervous about how recent financial market performance will affect your investment goals, our team is here to talk.
As with all investing, your capital is at risk. The value of your portfolio with Nutmeg can go down as well as up, and you may get back less than you invest. Past performance and forecasts are not a reliable indicator of future performance. We do not provide investment advice in this update. Always do your own research.